Palantir is increasingly positioning itself at the center of a powerful technological transition as generative artificial intelligence moves beyond experimentation and into full-scale operational deployment. What makes this moment especially important is that generative artificial intelligence is no longer confined to isolated tools or novelty applications. Instead, it is becoming deeply embedded inside the core workflows that define how modern organizations operate. These workflows include decision-making frameworks, data integration pipelines, automation systems, and real-time operational execution. These are not peripheral use cases. They are the beating heart of enterprises and government agencies alike. Palantir software has been designed for exactly these environments, giving the company a structural advantage as adoption accelerates. As this transformation unfolds, the timeline may be far shorter than most market participants anticipate. Truist analyst Arvind Ramnani believes generative artificial intelligence could effectively compress the cumulative impact of the last 4 decades of enterprise software evolution into a period of just 5 to 10 years. That kind of compression implies not gradual change, but rapid displacement and consolidation. In environments where speed, security, and execution matter most, vendors without deeply integrated platforms may struggle to keep up. Palantir, by contrast, has spent years embedding itself into mission-critical systems, which places it in a rare position as artificial intelligence becomes operational rather than experimental. Within this broader context, Ramnani argues that Palantir holds a genuinely distinctive market position. In his view, the company is uniquely aligned to benefit from rising artificial intelligence adoption across both government institutions and commercial enterprises. This advantage is not theoretical. It is rooted in Palantir's long-standing expertise in data integration, security, and governance. These capabilities allow organizations to safely apply generative artificial intelligence models directly to their own proprietary data, rather than relying on generic or externally hosted datasets. As a result, customers can generate insights faster, automate processes more effectively, and improve operational efficiency without compromising security or control. Palantir's artificial intelligence strategy builds directly on its proven track record of consolidating complex data environments and transforming raw information into actionable intelligence. Over time, this approach has earned trust across highly regulated and sensitive sectors. Today, that trust translates into a meaningful competitive edge. Palantir has embedded artificial intelligence capabilities across its core platforms, serving both government and commercial clients, and formally launched its artificial intelligence platform in April 2023. This platform unifies data integration, security, and artificial intelligence deployment into a single environment, allowing organizations to apply large language models to proprietary data while maintaining strict governance standards. This unified design matters because many organizations attempting to adopt artificial intelligence face a fragmented ecosystem of tools. Stitching together multiple vendors often introduces security gaps, governance risks, and operational inefficiencies. Palantir's approach avoids these pitfalls by offering an end-to-end solution built from the ground up for complex environments. According to Ramnani, this positioning becomes especially powerful as organizations ramp up artificial intelligence adoption and look for platforms that can scale securely without sacrificing performance or oversight. Ramnani also highlights Palantir's strength in go-to-market execution, particularly in industries where failure is not an option. Sectors such as defense, healthcare, and manufacturing demand airtight security, strict governance, and flawless operational reliability. In these environments, Palantir's fully integrated technology stack stands out. Once deployed, the platform enables cross-functional workflows that connect data, decisions, and execution across departments. This capability is far more efficient than assembling multiple disconnected tools, which often struggle to communicate seamlessly with one another. Ramnani views the artificial intelligence platform as a differentiated layer with built-in guardrails designed for sensitive information, noting that very few competitors can deliver comparable functionality at scale. From a financial perspective, Palantir's performance further reinforces this narrative. Ramnani points to what he describes as a sustainable Rule of 80 profile, reflecting a balance between growth and profitability that is rare among software companies. In the prior quarter, Palantir delivered a Rule of 114, combining 63% year-over-year revenue growth with a 51% operating margin. Looking ahead, Ramnani expects the company to maintain a strong margin structure while continuing to benefit from artificial intelligence-driven demand supporting revenue expansion. This momentum is already evident in Palantir's United States operations. The company's domestic business grew 77% year-over-year during Q3 Q3 2025, underscoring how rapidly artificial intelligence adoption is translating into tangible results. Ramnani believes that this trend is not limited to the United States. Over time, similar artificial intelligence tailwinds could extend into Palantir's international markets as global organizations move from experimentation to full-scale deployment. Cash generation adds another layer of strength to the investment case. Palantir currently produces free cash flow margins above 40%, giving the company substantial financial flexibility. Over the long term, this level of cash generation creates opportunities to enhance shareholder returns. Ramnani suggests that share repurchases are a likely avenue, particularly as a way to offset dilution from stock-based compensation while reinforcing confidence in the company's long-term value creation. Valuation is often cited as the primary concern when discussing Palantir stock. The shares trade above 70 times next 12 months enterprise value to sales, a multiple that understandably gives some investors pause. However, Ramnani argues that this premium valuation is justified by Palantir's exceptional financial characteristics. Based on consensus estimates, the company ranks among the top 3 software firms in terms of growth, while simultaneously delivering the highest margins out of 111 peers over each of the next 3 years. This combination of sustained growth and superior profitability is extremely rare in the software sector and helps explain why investors are willing to pay a premium. When all of these factors are considered together, Ramnani ultimately takes a decisive stance. He rates Palantir stock as a buy and assigns a price objective of $223. This target implies approximately 24% upside over the next year. By comparison, the broader analyst community maintains a more cautious outlook with an average price target of $190.06, suggesting roughly 5% upside over a 12-month period. In terms of overall sentiment, the stock currently carries a hold consensus rating, reflecting a mix of 11 hold ratings, 4 buy ratings, and 2 sell ratings. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.